Thank you, Ali Jamal, for being here. Appreciate it. And I think this is going to be very helpful for a lot of people who are going to join in and even watch later. Just some quick housekeeping. This is going to be an kind of ask me anything, which is literally anything. But hopefully people are keeping it related to the markets, your experiences, and maybe not your favorite color or something. But I think we'll be fine based on past session. It's been very, very interesting how people have specific insights and questions. And yeah, we'll start with just my quick intro. I'm Ahmed Malik. My background is in finance, and then I launched a couple of e-commerce brands on Kickstarter. We scaled them up, and the company got acquired about now 2 years ago. And after the transition, I've been working on a new company, which is called Caltropy, and we're helping managers and leaders, especially in Series A to C startups, reduce their unnecessary meeting workload. And I'm excited to be here. And Ali is it's a very interesting background, so I'll just give a quick intro. And if I miss something, forgive me, Ali, and please do add some color. He's a founding partner at FirstCheck Ventures. FirstCheck Ventures was founded in 2020, and since then developed a rich network of global business partners. They make early and transformational investments in companies that have potential to do great things. Their portfolio includes Tajir, Byte, which is also YC, Udhaar Book, QisstPay, InstaKin, which is also YC. I'm a co-investor, not co-investor, I guess, but also an investor, and Krave Mart, which is also YC. And he has more than 10 years of experience in various product and growth roles at companies like Zynga, RockYou, Agoda, Rappi, and most recently PayClip, which is one of LatAm's fastest growing fintech companies, and is a Stanford graduate. He's an angel investor as well, I think, and who has completed more than 200 deals. So there's a lot, Ali, and did I miss something?
No, that's probably the big highlights there. And I think one of the things probably is just the fact that I'm investing a lot in Pakistan, but also just a lot kind of across all markets,
Right.
and particularly given kind of my most recent background in Latin America, a lot of my focus tends to be in Latin America. So comparing, contrasting Latin with Pakistan,
Right.
could be also an interesting area for people.
Oh, absolutely. Well, that's a great kind of pointer. And I just try right away that's something I'm particularly curious about, and especially when I see anybody do that. You come from a pretty strong operating background. It's been various roles and in various regions, may I say, which is just in itself uh, a huge career. So then from there, what way do you switch to come to the investment side?
Yeah. So it wasn't really some well thought out intention. It was really, you know, you kind of initially start out as an angel investor, like kind of like what you've done as well. And people approach you for things, you're getting introduced to things, you're being asked to be a mentor, and then the ones you like, maybe you write a check. And then over time, that kind of portfolio starts to add up, and you realize you're spending more and more of your time doing that. And then, for me, kind of the transition really started to happen during the pandemic when I was kind of catching up with all these other people. And the fact that I was working and operating in these other markets and getting access to these deals, a lot of, friends and former coworkers weren't getting that access. And, I was telling them all these exciting things that were happening in markets they weren't as aware of, right? Like Pakistan or there's so many Pakistani Americans who don't know what's happening in Pakistan or in Southeast Asia or in Latin America, and they wanted that exposure in their portfolio. And so that's kind of what led me to start the syndicate to be able to offer these opportunities up. And even with the syndicate, it started as something that I thought I would do one or two deals a year. And then it kind of just snowballed where the first deal did really well. So I did a second, and then that did well. So I did a third. And all of a sudden you look at it and you've done 40, 50 deals in a year, and it's taking up all of your free time and you have no time for anything else. And it kind of becomes an obsession, right? Like this is my obsession, and I'm just super happy I could get paid off of my obsession. But it is the thing that I've become really passionate about and really excited by. And so for me, it wasn't this well thought out plan. It was really kind of doing things that I loved and trying to be helpful to the tech ecosystem. And then, eventually you figure out how you can contribute the most.
Makes sense. And that's, I think you make it sound simpler than it is. It does seems like it's a reflection of what your true interest and kind of, passion is. As you said, you're getting paid for what you're really passionate about. And having said that, we've everybody's seen the turbulence in U.S. macros, and of course that has a trickle down effect. Sometimes very strong, sometimes just completely unrelated to the entire region. So let's address the elephant in the room. Like, what is a very broad question? What's your take on that, and also what's your experience been in your portfolio companies?
Yeah. Um, so I think emerging markets in general, and I think especially Pakistan, really kind of swayed a lot with this exuberance that happened overall in the market. So in 2020 and 2021, there was a lot less due diligence happening, right? There was a lot of people that were starting startups in all these markets. They were getting thrown a ton of money, more money than they probably needed. Um, and they hadn't really built out their products yet. They didn't really have that product market fit. They didn't really have customers or revenue or things that were really stable. And so I think what's happened is um, there are, a lot of the investors are now a little bit burnt out and a little bit, worried about investing in some of these markets. I think Pakistan has also been, hit harder by other external factors other than just the overall market. Um, but kind of across the board, it's just been a tougher environment to invest in. Um, and I think those challenges though provide interesting opportunities. And so, you know, in 2020, 2021, these companies were getting such huge amounts of money. And, the average salary in Pakistan and a lot of these other markets is actually relatively low. So you have this set of companies that now have enough money, for the next 4 or 5 years, right? The ones that were very, you know, conscious of what was doing, were kind of proactive and reactive before the market, and ended up, being able to kind of stretch the dollars that they were able to get into a much bigger operating plan, get to break even, things of that nature. You then have this set of companies that, you know, thought the sun was always going to be shining, kept on expanding, kept on hiring, and then kind of got caught. And so, we saw some of them start to have some issues in 2022 and in 2023. But, it's going to be, I think 2024 is going to be this kind of next step of that, right? Like more and more of these companies that had raised for 12 months or 18 months are going to run out of money. If they have been, executing well and they've been able to get to a point where they're not burning anymore, they survive 2024, they survive 2025. Maybe they get to a point where we could get funding in later half of 2025 or 2026. For those that kept the big teams and, were still flying and having huge offices and all these sorts of things, I think, we're going to see more and more of these companies shut down, especially the ones that never really reached product market fit, that were spending way more on acquiring customers than they would ever make off of them. And one, I think it's going to happen in Pakistan, but two, I think it's going to happen across the rest of the market as well, right? So I think 2024, 2025, I think are actually going to be scarier than what people have been saying.
Makes sense. So it seems like it's the kind of the after effects or aftershocks or the actual effects in some sense are going to be, in your opinion, more visible this year and even later next. And one thing the word you mentioned, survival. At least I've personally seen a lot of startups have been or took a while to come to terms with that we're now going from grow, grow, grow to just survival. Those are very different skill sets. Those are very different teams. And the faster people realize that, the faster they kind of got there. Even larger, like Google and Meta, with all their cash piles, if they're recognizing something, it seems like the smaller, nimble startups, the sooner they go in that mode, the better. But yeah, I definitely agree with you, and unfortunately, that's the sad reality of things. So we do have some questions rolling in, and we'll just tackle them. They may switch themes here and there. First one is about the typical check size and investment stage for you.
So as the name implies, first check ventures, I try to be the first check in. And often what that means is coming in as a smaller check earlier. Um, you know, it's also kind of a partial factor of how much you're raising and what you plan on doing with it. So right now, I'm trying to write smaller, earlier checks. So maybe even smaller than what I was writing before. My checks probably in 2020 and 2021 were 250 to 300. Now they're probably more in the 50 to 100 range. I
Right.
think part of that is um, it's just also an acknowledgement of the environment that we're in, right? That companies have to be able to do more with less. Um, you shouldn't have that kind of grow at all costs type mentality, right? Like we should have a let's get to break even. Let's be more conservative with our money and our planning. And so, hopefully that 50, 100K is part of a round that's happening and there's more money coming in than just my money. But I know, you know, I'm not necessarily participating in these huge 10, 20, $30 million rounds like I might have been before. They're more like 300,000, 400,000, 200,000. And so, if you have a plan of what you can do with 100,000, 200,000, and you can get to break even, you can get to self-sustainable while still growing, right? That's kind of this tricky balance that we're trying to get to. And so, the check size is kind of a function of what can you do with it and what does it actually do for you? Does it get to you a point where I think we could get that next level funding, or you're not going to need that next level funding?
Makes sense. And I want to maybe a little bit different technical structure wise. So first check is a fund, and then is there a separate syndicate, or is the entire offering a form of a syndicate?
So there's both.
Okay, makes sense. So with the first check, you'll have LPs and so on and so forth, where the other one is more like a rolling fund maybe or something like that. Um, okay, and yeah, so actually similar theme is like how deal terms change to reflect the new different funding environment. Check size is one, right? Then there's the other side of what the term sheet looks like.
Yeah. So, I think valuations are lower. Um, One of the things that I've noticed is one, you know, the bigger later stage investors are kind of scared off, right? So we're not seeing them come in. And I think that also has now scared a lot of the earlier stage investors. So one, I think there's less kind of pre-seed seed funds coming in. But the bigger issue, I think, especially for a lot of these companies, is there's less angels coming in and less angels writing checks, right? And I think I'm kind of seeing that across the board that people that are just being much more cautious with their money and much more cautious about the environment. And so people that were going to be your first checks and writing a 10K, 15K check to get you 2, 3 months of runway aren't necessarily writing those checks anymore. And so I think overall, in order to get those initial checks in, people have had to lower their valuations and to execute more. So I don't think you are raising on just a kind of hope and a dream and a pitch deck on paper, right? Like I'm expecting people to have done more work. I'm expecting people to now have a live product, to have customers, to have revenue, to prove that there's something real there, right? Um, and that maybe had not have been the environment that people were getting funded, in before, but that's the environment and reality that we're in now. If you can show that you can execute without money, it makes me much more likely to want to give you money, right? And the more that you can prove out that you've done, the more that you can show that you're differentiated, that you're successful, the more likely I want to be a part of that, the more likely anybody's going to want to be a part of that. And so I think, it's not just the terms that have changed, but where you are in order to get those terms have changed.
Right. No, that's a very good summary of a very practical approach, I'd say. And so there's a few others. I think one, I maybe it's similar theme, so let me address that first, is where do you invest directly or partner with local VCs when it comes to, especially, I think your deals are spread across LatAm and even in Pakistan.
So it depends. Um, if you're raising $1 million and I'm not going to write you $1 million check, then we need to do it with partners. And ideally it would be somebody that knows the ecosystem and can be helpful. I could make more introductions locally. So in which case then I am trying to partner with the local, Pakistani VCs or Latin American VCs. If you are, raising 100,000 or 200,000 and you have kind of proven revenue and it's something that has a really strong opportunity that's worked before, I feel more comfortable going in without other people, right? Like I don't always need other people to validate the investment. Um, it's kind of, again, just all situational. Where are you in the process? What are you actually building? What do I think the likelihood is of it succeeding? Do I think you need a whole bunch of money in order for this to be successful? Different types of businesses need different types of capital. And so, how much do I understand about this unique thing? Do I think I could be helpful?
Makes sense. And so somebody asked about how to take a successful exit, the do's and don'ts of exiting your own startup. Maybe a little far down the line, I guess, but since they asked.
Yeah. So typically what, we kind of think of as an exit in venture, there's kind of two paths, right? Like one is that you get acquired and one is that you kind of go public. So going public is a pretty serious undertaking that typically happens once you hit, kind of very large metrics, right? You kind of become worth several hundred million or like $1 billion, and then you go through the process of IPO. On the other side, M&As can happen at kind of any given point. Typically in the beginning, if you're getting acquired in the first 6 months, a year, 18 months, it's usually not that great of an outcome for either you or for your investors because you typically haven't proven that much in the first 12 months or 18 months, right? You've had a 12-month head start on other people, but for the most part, people don't mind executing for 12 months to get to that same place. If you have been operating for 2 years or 3 years and now you have this progress that's been made, it's typically then you're kind of maybe going to strategic or maybe a private equity company's talking to you. There's a lot of different components to the acquisition process. But it's something that you should probably talk about with like it'll depend on your specific industry. It'll depend on your country, who your potential acquirers are. And what I find is that oftentimes the best companies, right, are having these conversations. They're not like the acquisition conversation, right? But they know who their potential acquirers are. They're building those relationships earlier. Oftentimes we'll even see them come in to make an investment or to be on the cap table. So they're getting the updates, right? And then it makes it that much easier to go through that acquisition process if they already have that relationship established.
Right. And I think we've, again, there's many examples of companies that at certain stage, especially later stage, they have maybe a list of like 3 or 4 potential acquirers, and then they'll start to, even grow or behave in a certain way that'll get the attraction of 1 or 2 of those firms. And I think recently, Convoy, was it the really massive logistics and stuff startup which just shut down randomly? Because one of the reasons the founder cited, at least from my research, was that their major acquirer didn't really seem to, show any interest. So that was very interesting insight, at least for me personally, where even at such a large later stage with so much revenue and so many options, I guess, the exit or IPO is very important, especially for the investor. And I want to kind of ask something about that, where you did, of course, there's the IPO or the acquisition, but I don't know as much about LatAm, but that's where maybe the comparison comes. And in Pakistan, there's pretty much you can count on one hand how many times that happened actually, right? Even large scale acquisition or IPO. But as an investor, you kind of have to sit with that, right? Because those are only your major outcomes. That's how everybody kind of wins. How have you thought about that in Pakistan, and how does that look like in LatAm, where there's maybe more examples of, maybe not on one hand, maybe a lot more than that, of exits and acquisitions?
Yeah, so I would say across a lot of these markets, right, there's only a handful of exits. But the thing is that, you know, the way I kind of think about it is I'm investing into a cohort, right? And I'm not investing into the companies that are going public now. The companies that are going public right now were companies that were invested in 2008, 2009, 2010, 11, 12, or whatever, right? When I'm investing in these companies that are going to be going public in 2023, 20, or 2020, 2033, 2034, 2035, right? And I'm expecting that these markets will evolve, right? Like the same way that we see a huge difference over the last 10 years, 12 years in Pakistan, in Brazil, and in Mexico, all these places. I think we're going to see the same thing happen, in these other markets. Two of the biggest, uh, or I guess probably three of the biggest, recent IPOs have been Nubank in Brazil, right? The Grab and Gojek out of like Indonesia and Singapore. Um, those were not markets that were supposed to IPO. It's supposed to be huge markets, right? But these are all companies that IPO'd at 40, 50, 60 billion dollars. So I don't think we should necessarily say like, oh, there hasn't been a huge IPO to Pakistan. There's never going to be a huge IPO to Pakistan. And you don't need just these huge, new bank type situations in order to have a successful outcome. So we also see the rise of these um, other IPO markets, right? You don't necessarily need to go public just in the US or just in the NASDAQ. You could go public in Australia or in Singapore and Hong Kong. Um, in Latin America, there are other stock exchanges that are evolving and that have been around for maybe 20 years, but haven't done that many IPOs and are now starting to do more IPOs. And so I think it's, we now are living in a time where it is much easier to build a company. It's much easier to build a significant company. If there's money to be made in Pakistan, in Nigeria, in Vietnam, wherever, I don't think people are really going to care, right? People care about making money and that's ultimately what cash rules everything, right? So if there's cash
Right.
that's coming through, then people are going to find a way to get it. And that will be helping to take companies public from Pakistan into Hong Kong or into the US. It'll be coming from more companies going and trying to do M&A and trying to capture that market, right? Um, and so I think there's going to be this consistent evolution. I don't think we need to necessarily look at what exists right now and to think about what's going to exist in 10 years. Even over the last few years, right? We saw this huge rise of SPACs and making it easier to take companies public in the US. I don't know what the exact mechanisms will be that people will be the hot rage in 2025. Maybe it'll be, something more on the crypto side or something else that will find a way to get liquidity to these investors and get liquidity for these companies. But if there's money to be made, I think, we're going to figure out some way to get it as investors, as companies, as entrepreneurs. I think there's these opportunities that will evolve.
Makes sense. And I think it should be at least very encouraging for me, and I'm sure a lot of the audience to hear that, because that's often brought up very, very often. So I really, your perspective and making the analogies even to hear, like we don't really know what's going to be hot, what's not. But one could say with maybe not reasonable certainty, but it's not unreasonable to assume that in 8, 10 years, it's only going to kind of expand because there's only one direction that those markets can kind of go in general.
Yeah.
So that's, yeah,
And I don't think anybody expected, Indonesia. Like, I don't think 15 years ago people
right,
expected Indonesia to be the hot market, right? And
right.
they have, you know, 7 or 8, unicorns, or at least they did, right? Like they had a whole bunch of huge companies that had sprung up, and that also like helped evolve the economies as well. So I don't, can Pakistan be the Indonesia of the 2030s?
Yeah,
Maybe, right? Like there's a case to be made. So to just, write off a country because of the current situation and not think about how can things evolve over the next 10 years, I think is a little bit silly. And I think, basically, you're making bets on can these people execute? Can they build meaningful companies? Are they things that serve customer needs? And, with, you know, 250, 300 million people and, GDP per capita that's growing and all these sorts of things, um, serving those needs of those people is going to end up being a huge opportunity.
makes sense. No, that's very encouraging to hear, especially from your vantage point. And just one quick question here, sandwich in the middle was how many women-led startups have you invested in?
About 45% of my portfolio
Wow.
companies are um, have a like a woman as either the CEO or a co-founder.
Wow, that's amazing. Certainly much higher than I don't even know the multiple times higher than what you would find elsewhere. So I'm not sure, but I'll still, since somebody asked, we'll go through it. I think the question is how can we step up planning by leaving one business but to jumping another business. Or I think what the person might be asking is if you're switching maybe context or industries, which I think you've done. I think that's why I want to ask this maybe more than a couple of times. How can you, I guess, deal with that? That would be my reading of this question.
I think the thing that was helpful for me is there's multiple components of what you're doing, right? You are operating with a specific kind of skill set, you are operating in a specific industry, you are operating in a specific location. And so only trying to change, you know, one of those variables if you can at a time. So,
Hmm.
if you were going to switch industries, can you bring a skill set from your previous industry and still use that, right? And then if you're working in that industry and you already have some exposure, can you then switch to a new skill set, but you already have at least that knowledge from that industry, right? So I worked in the gaming industry and I picked up, skills on mobile and mobile growth. And then when I jumped to the travel industry, I was able to bring that same skill set. And then, you know, that made it much easier to make that transition. And then in those roles, I was also able then to take on additional responsibilities and build up other skill sets as well.
And I think that's I would encourage anybody who's considering this or has done it before to really take in what you just said, Ali, because it's very, I personally also believe I'm 1,000% on the same board. I've switched personally from like the within finance corporate to like kind of, regular finance to M&A to like e-commerce, and now I'm making software, right? So there's a lot of these transferable skills that as long as you're confident you can bring to the table, it often is, it's scary, but the way you put it, I think it's a very good framework to have. So I hope that answers that person's question. Um, and the next one is, does your investment portfolio include businesses owned by Pakistanis based out of Pakistan? Secondly, how do you get in touch with you? I mean, we'll have that question anyways, and how to get in touch with you. So whatever you prefer, just to mention it, and everybody will, I'm sure, respect that. But yeah, I think your portfolio does include, from what I can see,
Yeah.
companies that are in Pakistan, of course, owned by Pakistanis.
Yeah. So I think all the ones that you listed in the beginning,
Right.
uh, except for QisstPay originally was started by an American, but now the CEO
Right.
is also Pakistani. So all of them are now Pakistani, right? So Tajir, Byte,
Yeah.
uh, QisstPay, um, Udhaar, um,
The Krave Mart also,
Krave
I think.
Mart. Yeah.
Again, and InstaKin is, of course, they're Pakistanis, but dealing with the market, which is maybe a little
Yeah.
bit different. Um,
And
okay,
there's also probably been, five or six companies that were Pakistani origin, but now are in the US and focus on the US market. But within Pakistan, there's quite a few.
right. And the contact question, because I was going to address that at the end anyways. What's the best method that somebody could get in touch with you?
Yeah. So I think just LinkedIn and sending me a message, and then also just making sure that you send me an actionable thing. So oftentimes people just send me like a hi or something, and what am I gonna do? Say hi back. So if you want me to, if you want to pitch me, right, send me your pitch deck so I can review it. So I make sure that like I'm not wasting your time and we're
Yeah,
just
right.
having more efficiency. So try to send as much information in that initial message as possible. And that way I can spend time dedicated to it and do it.
Awesome. And the next question is, are there companies you invested in that didn't turn out well? And what could be the possible reasons of failure? Again, I know it's still pretty early. We
Yeah.
started in 2020. So, um, yeah, but
Yeah.
and also like what's up, what's down kind of.
So, you know, I'm coming in at the early stages. There's supposed to be a very high failure rate, right? It's like 80-90% of the companies are supposed to fail. For quite a while, I was very successful and I wasn't seeing any real stumbles. But, I think especially over the last, 18 months, 24 months, some of the companies have had issues and have shut down. So, you know, I think some of the big things are, you know, getting more money before they got product market fit and spending more money than they needed. And ultimately, right, like so much of anything I'm going to say is going to come down to how much are you burning, right? Like the reason you shut down is typically because you run out of money. The reason why you run out of money is because you're spending too much. And so the more that you can control what you're spending, the more likely it is that you survive. Um, and so some companies shut down some companies shut down because they, you know, they kind of they tried out something, it didn't work out. They tried out something else, it didn't work out. They tried out, two, three things, and then eventually you're just like, hey, like this isn't working right now. Let me go back to a normal job. Being a founder is tough, right? And maybe they gave some of the money back if they had any money left, right? But you also might have run out of money at this case, especially if you didn't get to that point where you're having a ton of customers. So um, some of it's just founder fatigue if you did it for 2, 3 years. Um, and I think it can be tricky. Um, and so those are probably the big things, right? Like people that are spending too much, people that didn't get product market fit, people kind of burned out. Um, and I've been lucky enough we didn't have really that many fraud cases or any of that kind of stuff. And I think part of it was also kind of on us as investors, right? I think in 2020, 2021, people were given certain metrics, certain goals around growth and growing at all costs and all these sorts of things. And so people were executing against those plans and then, might have even executed well against those plans. But when they came up for funding in 2022 or 2023, VCs said, oh, sorry, we can't do that anymore. Right. Like, and I've had a couple of companies that ended up, trying to raise down rounds or whatever. And then a couple that, weren't able to do that. So sometimes it's just, the deals fall apart and the VCs pull out and it's just the company has to shut down because of things kind of outside of their control.
Makes sense. And what about some of the ones that are at this stage? Again, it's all on paper because it's still pretty early, that are doing well or may have just even excelled.
Yeah. So I think it's the opposite, right? It's companies that were smart about what they were burning. It's companies that went and found really great product market fit. They kept on expanding and adding more products for their customers to use. They found ways to make money when other people weren't. Keeping a small and lean team, we're then able to use that to get more money. And some of them even raised money in 2022 and 2023, right? So I have seen companies that have been able to add on and uh, it was the ones that were, planning for the rainy day that could weather the storms and that really focused on their customers. The more you focus on your customers, the more you get live products in their hands and you can iterate and you can build something that people want, the better your startup is going to be.
Makes sense. And again, it's at least for me, it's very personal. I've only bootstrapped before, and Kickstarter, it's crowdfunding. It's not even crowd equity. So at least even with my current startup, that's bootstrapping and even not even trying to fundraise before that point where it's that honest conversation where you're like, is this the thing where the next 5 years, this is it, right? And I feel like the market wasn't valuing that or even close to that because there was, for me personally at least, even in direct commerce there was so much funding and to even then say no to that or kind of not do that felt a lot of, I personally felt a lot of strain and pressure. Like everybody's just take this money, like why don't we do this and and do this and that. But it just at the end of the day, as an operator, as an P&L person, it just didn't feel like this was needed. At least my thesis was on direct to customer, and you're seeing a lot of that. And direct to customer isn't always, e-commerce isn't always suited for like venture dollars in terms of growth and all that stuff. But now it seems like that approach is valued, but maybe to another extreme. And I don't blame the VCs or the founder. It's just the world we live. This is the market. Yeah, I
Yep.
mean, like when COVID happened, it happened. You couldn't say, hey, I don't like this, so I'll do whatever. It just was there, right?
Yeah.
You couldn't, you had to deal with it. So it just seems to be valued. And again, somebody asked, the next question is somewhat related, right? In terms of if 2024 startups may not be getting the best valuations, is venture debt a better option than VC equity money? Um, Kind of answers itself, I guess, but I don't know. I'd love to hear your thoughts on this.
Yeah, I mean, that's also like a very like personal decision, like company to company. Um, if you can, I mean, and also not that many companies can get venture
Right.
debt, right? So, if you are lucky enough to get venture debt, and it is an opportunity for you. Um, does it make sense for your business? Um, would you rather have like what is the value of having the venture equity? What is the value of having the venture debt, right? And it's what can you do with each of them, and how do you utilize it? Um, I think I'd actually like to take also a step back, right? Like, um, and kind of what you were talking about as well, right? Like, not every company should be venture backed. Venture backed is a different um, system. There are hundreds, millions, billions of great companies out there that aren't venture backed or aren't venture backable, right? So why do you want to get venture backed, right? Like, are you going to fit into these expectations? Do you want to keep on kind of like it's kind of like getting on a roller coaster. You're gonna have to continue to execute on it, right? Like once you take money from an angel, then they're gonna want you to do a pre-seed, then you do a seed, then you do a series A, and you have all these expectations on you and what you're gonna do and what this business can do. And in the end, when these companies go public, the founders own a very few percentage of the company. They'll see founders get fired from their own companies all the time, right? Travis Kalanick got fired from Uber. We saw, even famously Steve Jobs got fired from Apple, right?
Sam
So,
Altman.
like, is this something like Sam Altman got fired and then from OpenAI? Like, is this something that you want to be a part of, right? Like, does this company need to be venture backable in order to be successful? Do you want to have that kind of expectations, that kind of lifestyle, that kind of commitment, right? Doing a startup is, having a huge amount of responsibility for, ideally 10 to 15 years before, again, you're kind of making money at the very end. But before that, right, you're not really taking that much money. They always show, Elon Musk private jet, but there was 20, 30 years before that where he wasn't doing that kind of stuff, right? So, um, you know, like, is this the best way to run your business? Is this how you want to do you want to expand this rapidly? Is this what your real dream is having, a big business where you have a little stake, or do you want to, expand at a rate that makes more sense for you and for your business? Do you want to, have a better relationship with your investors and be able to have them, be able to control them more than they control you, right? And so it's just something to think about and whether it's really worth it for you as a small business owner.
No, I think it's really helpful, and of course, there's a fine line between even for me, like when as we get to a point where you need capital for growth, but the whole question of generally even at very early stage, people are looking for a home run, right? Is there a fine balance between raising money and saying, yeah, this is not a billion-dollar idea, but maybe we can get halfway there or something like that, right? And does that interest rate excite some funds or not? I mean, we'll find out. I don't know the answer to that. It's very interesting to kind of, for me at least, to in my shoes to think about that or see that. But I think definitely what you said is very important. I urge people to kind of think about that because for some reason, because the zero interest reserve, the zero rate environment since whatever 7, 8 years, however long it lasted, people who grew up in that, it's just funding is good. It's not about okay, what is the business you're building? What do you need funding for? Funding is not a goal, right? And
Yeah.
even in recruiting, even back in the day, I would get asked that a lot when I was recruiting for the company, like, oh, so when are you going to raise big funding? I remember somebody literally asked me that, when are you going to raise big investments? I'm like, what? Like why? Like what does that have to do with? So that is not the goal, but now it's very obvious, right? Because even for a lot of companies, startups having a lot of money, not solving their problems, right? At all. Actually, that is the problem. Um, so yeah, I would say whatever Ali said in the last few minutes, just think about it again, why you want to do it. Um, again, so would you invest in potential competitors in your portfolio?
Um, Historically, I haven't, um, because I guess that's just what you're supposed to kind of do,
Yeah.
in venture. But the more that I've thought about it, um, the more I kind of think like it depends. Um, there are some companies where I am very heavily involved in where I have a lot of insight into their, growth plans, and I have this insider info, and I wouldn't necessarily want to be in a position where I would compromise them. But I also don't want to miss out on the next Facebook because I was invested in MySpace,
Right.
or, Google because I was invested in Alta Vista or something, right? So, I think, I'm probably coming to a point where I'm more and more open to it, but I don't really see. And part of it was also I tried really hard not to invest in companies that would be conflicts of interest, but so many companies end up kind of evolving and adding these other product lines, and then these additional product lines started competing. And so what I ended up with was like 5 or 6 companies that were basically competing. When they initially started out, they were all doing separate things, and that ended up being like the fifth feature on everybody's list. And now I have 5 companies that are competing for the same kind of thing. And so I feel like it might just end up being something that happens either way. And so um, I'm probably more open to it, but um, it's really a case by case situation, and how ethical I think it is, how ethical, uh, and how impactful I think it could be.
Makes sense. I think the Facebook and MySpace example was pretty cool. And again, it's subjective, right? So it's good to have that kind of openness, seems to me at least. Seems like a good idea. And yeah, so what are the industry areas that particularly interesting to you right now? And I know we'll talk about AI, but especially given your experience in different regions, very curious to know what that is. Maybe it's not AI, you know.
Yeah, so I think in countries like Pakistan, right, in
Right. Of
Latin America, where I tend to invest, it's not AI.
course, yeah.
Um, I think for me in those countries, I want to look at things that impact everyday people. I want to look at things that, help out small and medium-sized businesses. Um, a lot of that tends to have to deal more with fintech and financial solutions. I think that across almost all of these places, the systems that are currently in place are legacy systems from 50, 60, 80 years ago. And they haven't adapted, they haven't changed to the times. Most people don't have access to bank accounts. Most people don't have access to credit or debt. You don't have a credit score, or it's hard to know who to give credit to. And so solutions that go and start to address these questions, to start to even out the playing field, right? Like, and in Pakistan, we've had a middle class that has doubled or tripled over the last 20 years. Um, we now work in, or now, especially in kind of post COVID, we're in an environment where you can work from anywhere, right? You can have a much higher salary than that was possible, uh, you know, 5 years ago, 10 years ago. And so, what are the things that these, now kind of uh, more digital, more internet, more tech company, tech employees, what are things that they are looking for that they're not getting from the traditional industries or from the traditional companies that are there? And how do we serve this kind of rising middle class? And I mean, I don't think it has to be, huge, crazy things, but, how do we get them access to a bank account? How do we get them access to save up to buy a car, to make it easier to buy their own house, to be able to send money back to their parents, right? Like whatever these different issues are, how do we do things for everyday people, right? Like
Mhm.
so many people want to just take care of the elites, and there's a ton of venture dollars that go into elites. Most VCs, right, are elites that come from the ruling class, and then
Right.
of course they just back kind of their friends. And so, what can we do for everyday people who don't have that access, who don't have those sorts of things? And that's really where I think the opportunity to unlock the economic potential of emerging markets is.
That's very powerful again, and I appreciate that you have that lens. And you had mentioned this a little bit before. I'm curious because you're working in, again, LatAm is completely different from Pakistan. What are some of the things that you think, let's say, Pakistani founders could learn from LatAm founders and markets and vice versa?
So, I mean, part of my belief, right, is that all these markets sound different, but in reality, like when you go in, a lot of the structural changes are the same, right? And I think it's, you know, LatAm has similar problems to what I've seen in Pakistan. And, I lived in Southeast Asia and Thailand, and spent time in Malaysia and Jakarta and all these places. I spent time in Eastern Europe. I spent time in Africa. And from what I've seen, right, it's the same. It's the same situations. You have legacy systems. You have a small number of people and families that are very elite that control a lot of things. Um, Oftentimes, right, they're not necessarily in touch with the everyday people and the middle class, and they don't know what these people need or what these people want. And so, what I would say is that there are problems that we're facing in Pakistan. There are problems that we're facing in kind of every market. But oftentimes there's parallels to what's happening or what's happened in Nigeria, in Brazil, in Indonesia. And how have other founders been able to address those problems, right? And when you look at the portfolio that companies have invested in, they're all kind of, great companies that are solving a unique problem for Pakistan, but it's a similar problem to what was solved in other places, right?
Right.
And so, what are the things that you think are really a problem in Pakistan? Is it really unique to Pakistan, or is it a problem that happens across the world? How are other people solving it across the world, right? And can you go and look at what the solutions have been in 20 or 30 other countries, figure out what each of these other companies did right or what they did wrong, and then use that information in your research to what Pakistan needs?
Makes sense. So I think it's interesting to hear that, especially not just LatAm, but you work across and invest across so many different regions, and the parallels you find are, just a lot of very common uh, infrastructure level kind of challenges. And also, I was joking a little bit about AI because, again, of course, everything is about AI, but we tend to forget that that's solving. It's amazing, of course, for me personally as a non-technical founder, I've been able to make progress that's 10x, 20x that I wouldn't be otherwise, and that's amazing. But I'm not solving problems for, generally speaking, for people in those regions, and that's where a lot of the kind of infrastructure is missing. And there's always this proverbial talk about leapfrogging, for example, right? That happened in East Africa at least, where from there, no landlines, no phones, straight to cell phones, right? That just opened so much more. And again, I'm not sure what AI would have to offer in terms of those basic needs,
Yeah.
but certainly very different world that you're kind of operating in, where it might be a very small part, I believe. Um, but mostly it's about, the wider kind of needs um, that you're kind of looking at, and that's pretty pretty amazing. Um, it's refreshing sitting in Silicon Valley to hear from our perspective something that's not AI, which is of course AI is awesome. And so another thing that is often kind of asked is it's part of the question that was submitted was how are you able to support your portfolio companies, especially during this n- adjacent recession environment, or maybe you can even call it a recession. I'm not sure what we're calling it these days.
Yeah. Um, So, I try to be as helpful as possible. um, I'm coming in as the first check, but hopefully I'm not the only check, right? So there's typically a team of people kind of around there. So part of the reason or part of the way I've been helpful, right, is getting people to go from their first check to their second check at their third their checks and getting more financial support, getting more advice, getting more mentorship. Part of the way that I've been able to be helpful is utilizing my background kind of in marketplaces, in fintechs, with product, with growth, with data science, in Silicon Valley, in emerging markets, and giving advice or mentorship. And there are, you know, like I look at hundreds of decks a week, right? So I see what tons of companies are doing, and I'm also invested in several hundred companies, and so I see what all these companies are executing on, and you start to just kind of pick up on, okay, like this is something that you shouldn't be doing. This is probably something you should be spending more of your time on, and so there are probably just lessons that I see because I'm just looking at so many more things than other people are. So even if I'm not necessarily smarter or brighter, or don't have experience in these things, there are probably simple things with your hiring plan or your corporate structure or whatever that I just kind of can add value to. Um, Understanding where to kind of double down or double click the data in what customers might be looking for. So there's probably some of these things that I can be helpful for. And then, someone's probably just also kind of following the Socratic method, right? And having a conversation with the founders and asking the right questions to get them to get to the right answers, right? Because as an investor, and I'm a relatively small, part of the ownership, so I shouldn't be telling you what to do, and I shouldn't be dictating things to you. But I could kind of tell you what I might do if I was in your position, or some of the things that you should look out for, or some of the things you should dig into more, right? So that's why I really try to add the value or try to be helpful.
Makes sense. And I think you touched upon some of this before, but considering the fundraising environment, what do you recommend founders do to at early stages to stand out, from the crowd?
Get revenue, get customers, get
Exactly.
data, right? Like I get so many people who just want to get funded based on a pitch deck, and that's not happening. I don't think that's happening right now, right? I don't even think it matters if you went to Stanford and Harvard or blah blah blah, and are now trying to get funded. Unless you're doing something in Silicon Valley in AI, if you're in Pakistan, I don't think you're getting funded on just a pitch deck these days. So go out, get a team together, right? Execute together, get a product, get an MVP, get some customers, show why this is valuable. Right? Like once you've de-risked it, it's much easier to go and get money. All these things are just about risk, right? And right now, Pakistan in general seems riskier to people. So
Yep.
prove that it's not. Prove that your company is in. Go out and get more of these answers so that it makes it easier to bet on you than other companies. Because every investor has a ton of different options, right? They have other companies they can invest in. They have public markets. They now have, you know, I could go invest in a CD right now, 5 or 6%, right? Like if I can go get 6% in a CD, why am I going to get 6.5% by investing in a Pakistani startup? Like prove it out that you can build something and that it makes sense financially.
Makes sense. And since kind of going back to the generative AI question really quickly, where is there, because you see hundreds of deals, a week, maybe many times a month, are you seeing any patterns where there's maybe not from a, like AI solving problem for high-end users, but the supply of AI talent, maybe let's say, or people building different tools now, it's pretty decentralized, coming from these regions where they're maybe solving problems for the US market, but sitting from somewhere in Uruguay or Mexico for that matter.
I think what I see is that the companies um, I think it's hard, right, to build something for the US market when you're not there, right? Just the same way I think it'd be hard to build something for the Pakistani market or for the Uruguayan market from the US. I think there's a whole bunch of things that you get by actually being there. Um, I think one of the big problems is also if you build something great, right? You are now competing against all these other US companies, and it's much easier for them to go and see what you're doing and for them to add that feature, to add that whatever. And you really have to be the best company in the world doing that in the US, right? Because everybody else wants to go after the US, or everybody like there's 3 or 4 markets where everybody wants to go after. Unfortunately, Pakistan is not the highest ranked market on most people's minds. And that's actually probably a good thing if you're a Pakistani entrepreneur, because you could build a solution for local problems that, don't exist in the US that can garner a whole lot of usage. And you're not going to have as much competition because there's so many other things to be solved, and there's not as many teams going after the Pakistani market. So, you know, is there a chance that I invest in a Pakistani company that's going and building some sort of generative AI thing for the US? Sure, but I have to be confident this team out of Pakistan is better than any team in Singapore, any team in the US, any team in Europe, any team in whatever. And that's really tricky, right? It's just really tricky for me to believe that this team is the best of the whole world. It's not as tricky for me to believe this is the best team in Lahore, this is the best team in Karachi, and they already have customers and they already have revenue. I haven't seen anybody else that has revenue yet. Let's make a bet, and if they could capture Pakistan, that could still be a huge market.
Makes sense. I think that's a very good kind of lens, in my opinion, to have, that you're not just competing, even as a country, right? Every country is competing with the other one generally for similar products, services if they make it, to have that mindset. But again, there's so much within Pakistan
Yeah.
that I'm sure that it's you run out of that, then you can look out, I guess.
Yeah.
But we are
And I would
at
say something like Tajir, right? Like is kind of
Yep.
like a great example because Tajir is solving a problem that's sort of local to Pakistan and it exists in other countries, but um, like I don't see a country like I don't see a product from the US going to Pakistan to go and try to solve that problem.
Right. No, makes sense. I definitely understand that. Something really to think about for a lot of founders, I guess. And we are on time, but I still want to squeeze one last question, if it's okay. Do you invest in any company which is in the same domain but different region? And have you done that before?
Yeah, all the time. I actually like that a lot. I don't expect a company from Brazil to go and fight with the company in Nigeria or in a company in Pakistan, right? So if it's something that I've already been convinced of can work and I've seen one company scale really well, oftentimes I will go and make that similar bet. So um, I've done it multiple times in my portfolio. I've invested in multiple cloud kitchens, multiple like super apps, multiple um, you know, bookkeeping apps, like things that I think are kind of universal that people need in every country and are unique to each country. Like it's hard to scale a cloud kitchen company from Pakistan to Brazil.
Right.
So I can invest in one in Brazil and one in Pakistan and one in Nigeria. And I don't think they're going to compete for 20 years. And by that time, if they're still around and they're if the Pakistani company is now trying to get into Brazil, I think I'm in a really good position,
Yeah.
right?
Makes sense. Oh, that's a great summary, and maybe encouraging for some people on the call or will listen later. But again, we are wrapping up. Ali, again, thank you so much for your time. This is very engaging. I'm sure very helpful for the community. And just a reminder, everybody, that if you want to reach out to him, LinkedIn is the best. Maybe have a little ask or something specific. The better it is, or something for him to look at. Again, thank you again, Ali. Appreciate it. This is a lot of fun.
Yeah, likewise.
All right, take care. Bye bye. Bye,
Thanks, guys.
everybody. Bye.
Thanks, everybody.